Hello friends. In the last video, we had studied as to what is the accounting equation, its importance and its limitation. In this video, we are going to understand it a little better with the help of an example. So we had studied that an accounting equation is where all the assets equals to the liabilities plus the capital. The asset is what belongs to an enterprise in which the enterprise has an interest. The liability is what a business owes to a third party, and capital is the owner's interest, the amount or the asset brought in by the owner for the use of business. So let us begin with the example. It is given that Raghunath has a following transaction in a year. The first is a commencement of business with cash, rupees 50,000. So we are going to write down asset. We are going to leave some space for the assets because there are various kinds of assets is equals to liability plus the capital. So the first transaction is commencement of business. So Raghunath has started the business with cash. So cash is my first asset. He has brought in 50,000 cash. So there will be an increase in cash by 50,000. Also, since he is the owner of the business and he has brought in the money from his personal pocket, there will be a corresponding increase in the capital. So after this transaction, the total asset is 50,000 cash and 50,000 capital. Now, the second transaction is paid into bank rupees 10,000. So, he had 50,000 worth of cash. Out of these 50,000, he deposited 10,000 into bank. So, cash in bank is my next asset. So, paid cash into bank. So that way, my cash will get reduced by 10,000 and there will be a corresponding increase in my bank balance by 10,000 rupees. So the position after this transaction is we have 40,000 cash, 10,000 at bank and 50,000 at capital. The third transaction. The third transaction is purchased goods for cash rupees 20,000 and credit rupees 30,000. Now first is cash purchase. That means we have bought the goods by payment of cash of 20,000 rupees. So my stock has increased by 20,000 and for this increase in stock we have paid cash worth rupees 20,000. So my cash balance will get reduced. Now I have purchased on credit. Now what is credit? Credit means udhar. That is, I have got the stock immediately but I will pay for it in the future. Therefore, I will owe 30,000 rupees to the supplier. That will be my liability. So my liability has increased by 30,000 and my stock has also increased by 30,000. Therefore, at the end of this transaction, my total balances are cash 20,000, bank balance 10,000, stock 50,000 creditor 30,000 and capital 50,000. So far the assets and liabilities are balanced. We have 80,000 worth of assets, which is equal to 80,000 worth of liabilities. That is 30,000 liability, 50,000 capital. The fourth transaction is sold goods for cash rupees 40,000 costing rupees 30,000. Now this means that the cost of the goods was 30,000. Obviously, we are going to sell the product at a higher rate. That is how we make a profit. So, while the stock was reduced by 30,000 only, we got cash of 40,000. We got cash worth 40,000 rupees. So we see there is a difference at this stage. Whereas the asset has increased by 40,000, stock has reduced by 30,000, the remaining 10,000 is my profit. We are going to add this profit to the capital account because this profit belongs to the owner of the business. So after this transaction, my balances are 60,000 cash, 10,000 bank balance, 20,000 stock, 30,000 creditor, and 60,000 capital. Now next is rent paid rupees 500. So that means my cash balance will get reduced by 500 and correspondingly this is an expense. That is, my profit will also get reduced by 500. So we'll adjust this with the capital. Therefore, our balances will be 59,500 cash, 59,500 capital, and in between 10,000 bank, 20,000 worth stock, and 30,000 worth creditors. Now next is the rent outstanding. Now what does this mean? This means that 500 rent had to be paid, but it is outstanding. That is, we have not yet paid it. So the outstanding rent will be my liability. I have to pay it in the future. Now, sorry, 100 rupees. Now this is also an expense, so it will reduce my capital. So at the end of the transaction, the balances are 59,500 cash, 10,000 bank, 20,000 worth stock, 30,000 creditors, 100 is the outstanding expense, and 59,400 is my capital. The seventh transaction is bought furniture. Now this furniture is also bought on credit. That is, we have received the furniture today, but we are going to pay for it in the future. Therefore, my asset will increase by 5,000 rupees and my creditor will also increase by 5,000 rupees. We will have to pay the supplier in the future. At the end of this transaction, the balances are 59,500 cash, 10,000 worth bank, 20,000 in stock, 5,000 of furniture, 35,000 creditor, 100 is the outstanding expense, and 59,400 is my capital. Now the eighth transaction is bought refrigerator for personal use rupees 5,000. So now this refrigerator has been bought for the personal use of the owner and not for business purpose. Therefore, my cash will get reduced by 5,000 rupees because we have paid for this purchase. We had learned in a previous video that when a withdrawal is made from the business for personal use, it is known as drawings. So this is also a form of drawings. Therefore, we are going to adjust it with the capital. So my capital will get reduced by 5,000 rupees. Therefore, the balances now stand at 54,500 cash, 10,000 bank, 20,000 stock, furniture 5,000, creditor 35,000, 100 rupees outstanding rent, and 54,500 of capital. Now the last transaction is purchased motorcycle for cash. So we have paid cash. My cash will get reduced by 20,000. By paying this cash, we have acquired a motorcycle. Since I'm not having space, I'm just mentioning it down. So the asset has increased by 20,000 in the form of motorcycle. So at the end of this transaction, we have 34,500 of cash, 10,000 at bank, 20,000 worth of stock, 5,000 worth furniture, and 20,000 worth of a motorcycle. This is my asset side. In my liabilities, I have 35,000 liability creditor, 100 rupees outstanding rent, and 54,500 in the form of capital. If we are to make a summary of this, in my liability side, I have capital of 54,500, creditors 35,000, and outstanding expenses of 100 rupees. In my assets, I have cash worth 34,500. I have a bank balance of 10,000 rupees. I have goods worth rupees 20,000 rupees. Furniture worth 5,000. And motorcycle of 20,000 rupees. Therefore, my total liability is 89,600 and my total asset so this is 54,400. 9,500. My asset is also 89,500. Therefore, my asset is equals to the liability plus my capital. I hope this solution was clear to you. If you have any doubt, you can post them in the comment section below. If you like the video, do share and subscribe. Thank you and happy learning.